Good morning, and thank you for joining us for a debate, a bull-bear debate on Tesla with Brian Bolan from Zacks. He is a big bull in the name. I am, of course, a bear, and we're in the odd position of both having been right over the period over which we've covered Tesla. Brian, a much longer period. Us, we just launched in June. The question now, of course, is what lies ahead. And Brian, maybe you could give us a little bit of an introduction, your elevator pitch on why you're still long Tesla.
You know, I personally am not long, just so we know. I am, though, bullish on the prospects for Tesla. And I think at the end of the day, the number one thing that's going to drive Tesla, the stock, and the company, and all of its fans is just that. It's just demand. We've already seen that there's been, more demand than expected for the high end, for the luxury car. Not to say that the company is beating expectations on delivery numbers and that sort of thing. There's a struggle there, and I'm sure we'll talk about that later. But down the road, as we see, real production pick up here for the Model 3, I think you're really going to see that demand factor start to increase. There's already that 400,000 or so, units, paid for already, or at least deposit on. That number is only going to grow from here. And I think that's kind of the story here, is that demand there to drive the stock even higher.
That's great. So our view, I think, has been that story stocks hate dates with reality, and that the Model 3 is often, or is very likely for Tesla to prove to be that reality. A lot of the data that we track, such as used prices, used availability, average discounts on new Teslas, point to actually what's interestingly counter to your point, which is that there is a lack of demand for electric vehicles more broadly, and for Tesla specifically. That there is some demand, but the demand growth just isn't there from what we can see. Even with the subsidies, we see Tesla's growth stalling, right? Sequential deliveries and sales have largely not done that well, and in areas where we've seen subsidies removed, we've seen sales of electric vehicles crater. I think it is worth remembering that the EV market is based on subsidy and regulation, and that over the next couple of years, Tesla's going to be in the awkward position of having its competitors receive full tax credits while it itself starts to have burned through its federal tax credit in the US. The other thing I think that's very important is the impact of Dieselgate, which is going to make it much harder for many of the existing auto companies to meet their emissions regulation requirements, and that they will pursue very aggressively electric vehicles as a means to do that, even at the risk of generating a loss on those units. These are companies that have, such as Daimler, 120 years of experience in effectively competing in this market, and also a legacy of being willing to lose money meeting those emissions requirements with cars like the smart car, which was not a financial success for Daimler. So the upshot is that we don't see a pathway to profitability for Tesla. We see competition increasing and subsidization decreasing over the next couple of years.
Yeah, and I definitely hear you on the idea of the competition. It was actually just yesterday I saw the BMW electric car on the highway here in Chicago, and I thought to myself, this is the most hideous looking creature of a car that I've ever seen. And it's not too different from those Mercedes smart cars. It's incredibly compact. It's really small. There's zero design. There's zero creature comforts in it. Yet it's supposed to compete with this Model S, which is an absolute piece of luxury, inside of a sedan. That's kind of the thing of, like, when we talk about these general story stocks, and this is definitely one, this is the story of the competition. This idea of an electric car is not something new. It's been around, literally for decades. We think about why Tesla even came into being was that, there was that Ford or the GM electric car that was being recalled. The company was taking the car back from the people who had bought it, and crushing them, basically. And it's the idea that people out there want this sort of thing. They, especially when we start talking about the idea of millennials and down the road, they want renewable energy sources. They're not looking to increase carbon footprints. They want to decrease them. this is definitely the way to do that. As we look at the competition, if these companies were capable of making these things already, they would have, and that's the biggest barrier right there to the idea of competition is going to destroy this. It's not so much about tax credits or anything else. It's just that they can't make these things the way that Tesla has been making them. You need to really retool the factory. You can't just start from, you take the Ford F-150 line and suddenly we'll just add in an electric engine. It just doesn't work that way. And I think that's where you're going to have like the major portion of the competition, idea of this. Like the other companies are going to come in, they're going to have these things, but they're going to have just as many hiccups and just as many problems as Tesla has had along the way, if not more, because they're so entrenched in how they do things.
Well,
stopping.
I would push back a bit on that. We haven't seen a competitive entrant in the luxury space yet, but we are looking at entrants like the Jaguar I-Pace, the Audi e-tron. There are these vehicles that are coming, and they are coming just as Tesla's subsidies start to run out. So customers will be in this position where they could buy a Jaguar I-Pace with a $7,500 tax credit, or a Model X or Model S without that. And then, I think it's also worth noting that you can already buy a used Model S for about what a Model 3 costs. And what we're tracking, and I think we can show the European Model S data slide, is a significant increase in the availability of used Teslas on the market. So historically, they've kind of gotten the benefit of the channel fill, right? So you haven't been competing with your earlier production. And that as we get these off-lease Teslas coming to market, we actually see a very rapid increase in used Teslas that indicate that demand isn't really all that deep, right? If I can go to a Tesla store today and for $35,000, $40,000, $45,000 buy a used Model S, why would I be sitting around waiting for a Model 3?
That's a great question. Obviously, if I haven't looked too much into the used market, so to speak. And I think that does speak to the idea, that's a very good point of, the channel demand not being there. But, at the end of the day, people want, their car. If you think about who's buying new cars and, the people that are doing that, don't think about, the sticker price versus if I bought something that was 2 years old, I know I'm going to save a lot of money on it. New cars are still bought all the time, at any range of list prices. And the other idea of someone buying a $120,000 Model X, right, and you're competing against the the big Range Rovers, the ultimate Mercedes cars, the G-Wagon, that sort of thing. $7,500 isn't going to make or break your decision on buying a $120,000, $130,000 car. So your tax break there, while it is it's real money, $7,500 or possibly even more. I think in the state of Illinois that they're it's like $12,000 with rolling over a few years that the benefits would be there. You're definitely not making that purchasing decision just based on that. It definitely is an add to the competition. But if you're that person that's buying that that Jaguar style car or that other one, it's like is that going to work with the Tesla supercharger network? Where am I going to recharge this? There's the logistics issues around that car versus a Tesla network that's out there and available. Other people that have the cars in your neighborhood, around your city. So getting it fixed, getting it charged, that sort of thing. Those problems have already been figured out. If you're buying a Jaguar, you're definitely not going to be taking that thing from Los Angeles to New York.
Well, I mean, I think there is an effort, for example, on the behalf of VW, as part of their settlement for Dieselgate, they have to make investments in the charging infrastructure over the next few years that are quite substantial in terms of dollar value. But I mean, when we're talking about the depth of demand for these vehicles, right? Tesla doesn't make money selling Model X's and Model S's right now, right? In fact, the biggest subsidy that a Tesla buyer probably gets is from the shareholders, right? It's like $9,500 a vehicle of loss that Tesla, the company, is reporting per vehicle that they produce. the way that they're supposed to get to profitability is the Model 3. And there's two things that we see that are a big problem with that. One is that the Model 3 is a mass-produced vehicle, and Tesla has not had success with mass production. The idea that these existing auto companies with much larger R&D budgets just can't produce an EV and mass produce it. I think the bigger question is whether or not Tesla can actually mass produce anything. It doesn't seem to have much of a history of success in doing that, and the early production of the Model 3 certainly doesn't look like they're going to ramp very easily to their production targets. And then secondly, if they're not actually going to produce a Model 3 until a lot of competitors have worked out their kinks, maybe the pool of demand just isn't there. Maybe these traditional auto companies aren't being stupid by not introducing EVs. Maybe they just don't see a market.
And I just want to say, absolutely, I agree with you 100% on, the idea of production rates for Tesla and how they continuously, miss the mark. I think there's only one time when they've really, come in ahead of expectations on a delivery number. That kind of, in a way, is actually, I know this is going to sound terribly stupid, but that is actually a benefit for the company. If you look at how the stock has performed over the course of the last several years, when there's been those, delivery numbers released, consistently under the expectations, consistently under them, with only one time in the last quarter there where they delivered over 25,000. That was their first ever beat. And it's just at this point where everyone's expecting them not to be able to reach expectations. So it's that, I don't know what you want to call it. It's this idea, there's this expectation, we know that they're just not going to make it. And that's always served them well. So why not continue to have expectations sky high, saying the 250,000 Model 3s for next year. And if you come in, even at just 200,000, that is so significantly underneath the number, but yet wildly above, a lot of expectations, especially on the naysayers there that say that they can't even make these cars. Obviously, the battery component seems to be the biggest, thing that's out there, as far as a hurdle goes for getting this out there. Because if you have all these people that have put down these deposits for these new cars, they're going to get sold into the market. So, the actual selling is the one thing. It's I think clearly it's the execution on the delivery end.
Well, I would point out those deposits are refundable, and that for the last 3 quarters, the deposit line in Tesla's balance sheet has actually trended lower. So this upcoming quarter, we could well see deposits down year over year, again, further indicating this lack of demand for electric vehicles. How are you so confident that people want an electric vehicle? Because the reality is that an ICE is a known product. Nobody knows what an 8-year-old Tesla works like. How can you be so confident that, in fact, all those Model 3 reservation holders will end up taking delivery?
And that's kind of the thing. It's, we talked about the internet has talked, I shouldn't say we have talked, Jay, but, the internet has discussed a lot about the comparison of Tesla to Apple. And it's like, they're building this super phone, right? But how do we know we really want this super phone? Well, we don't know that we want it, but once we have it, it's like, wow, it has changed the world. When the Model S came out, it was kind of like this, well, this is just for ultra rich people that are, just in this one small class, that just want to do something about the environment, and they want to have a neat gadget toy that no one else does. Yet somehow, there's been 100,000 of these people that want this, so you're getting into this idea of there is something more to this than just being a car. It's more than just being a mode of transportation. A lot of the things in the Tesla, I test drove a Tesla before, and obviously I've been following the story a lot. The features and the technology in the car itself, are far superior to pretty much everything else that's out there on the market. And I'm not going to go race my Tesla if I buy one, but there's people that do that drag race them. That's an ultra luxury car that's at the racetrack. There's a lot more to this. If you think about the people in America that are buying cars, just new cars all the time, this is something that is aspirational. This is something that changes the game. This is something that they know is the future. Everyone knows, 30, 40 years from now, it's going to be electric cars. It's going to be sustainable energy model. It's going to be that sort of thing. It's not going to be the dependence on oil. So the people that are going to be in the space early are going to be looked at as the adopters. Are you going to be the guy that's going to be buying the, Ford Fairlane, or are you going to buy like the upcoming new great thing, that's coming out there, that you're going to be ahead of the curve? And a lot of it, especially with the pricing of the Model S and even the pricing of the Model 3 to some degree, is about, having that name out there saying that I'm the one that's leading the pack. I think you're going to end up seeing a lot more, especially in the younger set of people wanting to be in that position. And the car is a perfect way to show that.
So first, I don't think it's entirely obvious that we end up eventually with electric vehicles on the road. I think there are some real limitations that the vehicles impose on drivers. I think an iPhone delivers a whole bunch of capabilities. I think the analogy to an iPhone, which is the most common analogy we hear when we go into investor meetings, it's like the iPhone. It's like, okay, first, at closest, it's like the Palm Pilot, right? You have a money-losing company that doesn't have an established operating system, a brand that stretches back 20 years. Apple was an existing competitor in the PC market before, and the iPod before it got to the iPhone. It was profitable when it sold the iPhone. The iPhone costs much, much, much less, and it did things that the existing competitors didn't do. Whereas a Tesla is mostly a piece of transportation capital equipment. The goal of a car is to get from A to B. And then we're going to go into like self-driving and those features, but there's no reason that a self-driving car needs to be an electric vehicle or a Tesla, right? There are many other auto companies, Audi, for example, that have introduced self-driving capabilities. And there are safety features, and self-driving capabilities that are on other cars and not on Teslas, like thermal imaging. So I'm not sure that a Tesla really does anything that is that different. In terms of people, like I have a buddy who came over and he's like, oh, I just drove the 100D or whatever at the Tesla store. Turns out I live 3 blocks from a Tesla store. And so everybody who goes comes by my house afterwards. He's like, oh yeah, it's a really great car. And I was like, yeah, it's like how many $125,000 cars have you driven that weren't nice inside, right? If you drive a Mercedes S-Class, you're gonna say, what a nice car, this could be the future. It's very feature rich, I just don't see what makes a Tesla, my question for you is what makes a Tesla, what is their sustainable competitive advantage? What is it that they can do that VW with their, 20x the size research and development budget can't imitate in a day and mass produce much, much cheaper with a stronger supply base, scale, experience in mass production, and also, somebody like, Audi has a very, very good brand and basically put Tesla out of business. Why is capital equipment not very different from an iPhone?
Right. And thinking about this question, I used to be a research analyst that would cover the internet, and Google was one of the first stocks that I covered. And I remember just after launching a report at one shop that I worked at, the CEO came to me and says, hey, have you heard of this new thing? It's called QL. It's going to blow Google away. It's these 2 engineers that understand, the whole thing of search, and they've put together their own search engine, and they're going to do it. And the idea is you missed the whole point of the Google report. They have such a dominant lead because they've been out there for years. They have that first mover advantage and destroyed the other competition where they are the de facto search engine, right? I'm not going to call Tesla the de facto electric vehicle producer here, but that first mover advantage is worth a significant amount. Number one, you get to have all the people, driving all those miles that's reported back to Tesla in a way that they get to have that the automated driving type technology where they're going to have a better mousetrap basically. And when it comes to the that sort of thing, and that is being your purchasing decision, when they are going to be literally 5, 6, 7 years ahead of pretty much all the competition just because of all the raw data that they have, that becomes a very big advantage and why you're going to choose a Tesla as opposed to, the Audi or the GM car or anything else that has, self-driving capabilities. The other aspect about, the
can I
networking.
Respond to
yeah,
this
sure,
step?
go ahead.
So, I mean, in capital equipment, there is no such thing as a first mover advantage, right? Because capital equipment are long-lived assets, and somebody doesn't have to put you out of business with your innovative, loss-making product in the first year. They can do it in year 3, year 4, year 5. In fact, if you look back at capital equipment producers, which is my background, right, you have not seen in the last 50 years really a new entrant into any capital equipment market at all. So if you look at construction equipment, mining equipment, HVAC equipment, autos, there's really not been a successful new entrant into into any of those. Your base rate, if you think about it from a base rate perspective, your base rate's pretty much zero, right? You had Airbus come in, but it was heavily subsidized, and that was a really long time ago. There's a few examples here and there. But to get, if anything, sort of the data edge that a Tesla, which is perhaps 100,000 cars out of 250 million cars on American roads, like the idea that they're going to get this data advantage from this like incredibly tiny fleet of EV-only vehicles and use that to refine their autonomous driving software, that seems like an incredible disadvantage. Like, why wouldn't you also have data gathering from electric vehicles, internal combustion vehicles? Somebody like Daimler in a single year, probably in like a month, sells more vehicles than Tesla has sold in its entire existence, and it could gather data from all of those as well. I mean, it doesn't need to do that today. It could do it next year and put Tesla out of business. Tesla hasn't made a dime.
Right, but I think the idea is that they haven't done that, right? And that's where that mover advantage is. There's going to be the learning curve of how these things develop. Think of Tesla as having done this for the last several years. Just because you have suddenly a great huge sample size doesn't mean that you're not going to be able to take that time to learn, to figure out what the problems are as they occur in the vehicle, and to be able to have a better system. It's just because you have all the data, doesn't mean that you can analyze it immediately and figure out what the problems are. I think it's the type of thing of a situation where as you're moving forward, you encounter more obstacles, and you have to be able to fix those obstacles on the fly. Can you fix them immediately just because you know that they're there, or do you have to come to them before you understand this is a boulder versus this is a paper bag? Can I run over a paper bag? I sure can. Can I run over a boulder? I don't think so. Well, I mean, maybe you can, but I don't know that you want to in that big $90,000 car.
I think the difficulty is that we end up with a little bit of survivorship bias when you say it's an iPhone, it's Google. And the reality is that the history of companies like Tesla look more like Alta Vista or Palm Pilot or BlackBerry, where basically somebody like Apple sits back and plays with the Palm Pilot for a really long time, has 50 good ideas at the expense of, a money-losing Palm Pilot, and then comes in with a killer product. Maybe that's e-tron, maybe that's iPace, maybe that's whatever VW is forced to come out with. Maybe that's fuel cells, maybe that's any number of products. When I look at a Tesla, mostly I look at a car that, for my purposes, would be inferior to the car I already own, right? Like I'd have to bribe the guys at my garage to charge it. I'm not sure how much that would cost in Manhattan, but I'm sure it's not. I'm sure it's a good Christmas bonus. I would have, to install chargers at weekend houses or whatever I'd have to do a whole bunch of stuff to accommodate this car. And then, the benefit I get from that, like this theoretical less maintenance, a autopilot that realistically isn't developed enough that you can trust it, there's a whole bunch of, fairly minor benefits that I would get from that. I'm not a guy who needs to go 0 to 60 in 3 seconds. It doesn't really matter to me. And it's a pretty expensive car relative to sort of the features you would put out there. And when we look at the actual data, whether it be delivery growth, right? Sequential deliveries are actually going down. They're not missing targets. They're actually declining. When we look at used equipment prices are cratering, used counts are going up. What we see is that, in fact, the traditional automakers may have it right, that there isn't a demand for electric vehicles outside of a subsidized and regulated market that's of a very limited size. Like, how much can the government subsidize of auto sales, right? You obviously can't give $7,500 to everybody who buys a car, and states aren't going to give, Colorado isn't going to give $5,000 to everybody who buys a car. So you're really limited in how much subsidy you can get and how much growth that can drive. And obviously you can only have so many cars in an HOV lane. So is it possible that people really do care about the HOV lane, the $7,500, the $5,000, and the $10,000 that they get from Tesla shareholders, and they go and they drive this car, and it is a good deal in the end because you're getting all these various subsidies, and that absent that framework, maybe there isn't a tremendously deep demand.
Well, I definitely think that you're very partially right on a lot of those things. There are great subsidies out there right now, but down the road, the idea, and just on like the charging idea, and driving into Manhattan, so assume that you live 100 miles outside of Manhattan, and number one, that you're crazy enough now that you want to drive that 100 miles to Manhattan. You'll still be able to make it on a full charge, 200-mile round trip, and that gets into like the fear of the electric car, right? So that it's that 200-mile limit. If you're driving 100 miles to work, you need to move. Okay, you need to move closer to where you work.
Hey! You're talking to a guy who lives in Manhattan who's sitting in Stamford, Connecticut. So I don't come here every day, but I do live that dream.
Well, I mean, is it 100 miles? Would it be a 100-mile drive?
To be honest, I don't know, because I drive a gasoline car and it makes absolutely no difference how far it is, but I don't know.
Right.
I care more about traffic. I mean, there is a Tesla supercharger on the Merritt, and yesterday I pulled in and actually they were all full. So not only would I have to wait half an hour to charge my Tesla, but I would have to wait for somebody else to charge first.
Right. That a little bit speaks to the demand out there. Obviously, there is the people using this sort of thing, and down the road, the idea of the supercharger network being there, but then any place that is named a fuel station where you would get gas for your gas guzzling automobile, down the road, there's going to be a requirement for places like that, if they're going to call themselves fuel stations, to offer electricity as well. And that kind of changes the game too, because then once the electricity is really ubiquitous and the charging station is really ubiquitous, then the fear of taking the car for longer than a few hour trip, really becomes, a non-factor anymore. And I think that's really a big, part of it. If you have your lake house, like if you're living here in Chicago, you have a lake house up in Lake Geneva or someplace up in Wisconsin or over in Michigan, that Tesla really doesn't make too much sense, because you're going to barely just get there, if at all, even on a full charge, or that you're going to have to stop for a half hour to charge up just to make it there and then charge again. But once that the network is really fully out there, it becomes a completely different story. And I think that's kind of the thing that's holding everything back right now, why a lot of people aren't buying it, especially when you're talking about a sticker price of around $40,000 for a new car. I bought a new car a few years ago, and the sticker price was 46, and it just, the feature rich type idea was great, but then take a look at the Tesla, it's so much better. Obviously it's double the price, so it's tough to compare those sorts of things, but at the same time, I except for trips to Cleveland, I really didn't drive that car more than 200 miles in a day, ever. So the range factor is kind of that big thing that it's the boogeyman that's out there that's holding everybody back. But down the road, if you think about it, if you talk to the millennials out there, they say if they wanted a new car, it didn't matter what prices were. Take away that idea of, this is how much money I have and this is what I can afford. Would I want this type of car, or would I, obviously you're going to have a lot of people saying I want the Ferrari, and that's a whole different car valuation story and everything else to talk about. But who would want that Model S, and the sustainability of the idea of the energy source is definitely one of the biggest drivers and one of the biggest reasons why down the road people that can afford this car will be buyers.
No, it's funny when we look at Tesla's ability to mass produce things like vehicles per employee, revenue per employee, per square foot. It actually looks a lot like Ferrari, which is one of the reasons we're skeptical about them ever mass producing a Model 3. I think that it's a tremendous burden to Tesla to be not only forced to develop these cars, produce these cars, finance, they do their own leasing, a lot of their of these cars, but then they're also forced to build out their own basically gas station network. Like if GM had to build their own gas station network, it would be a lot of extra capital, a lot of extra time, and it's an extra subsidy that shareholders are providing to Tesla buyers today. And I think we always, so when you talk about Tesla, we always seem to get into the is the car nice? Yeah, the car's nice. Like everybody should like the car. It's like a $150,000 car. The question is, can the company actually ever survive and make money, and not get 1 year in the next 3, 4, 5, whatever number of years it is, competed out of business? And that's where I think when you look at it as capital equipment, with lots of used inventory coming to market as these cars come off lease, there doesn't seem to be the demand for the current network build out and the current technology that investors would need. And with subsidies set to expire, starting with today's Model 3 orders, I think it gets to be a very hard road ahead. Do you want to throw in a last word?
Yeah, absolutely. I agree with you with the idea that the subsidies are coming to an end here, and the competition's about to come into the market. You've got all these things, lined up against it. Yet at the same time, there's people buying them. There's people waiting for them. They want them. The demand is there. And that's kind of the key thing. Obviously, quarter to quarter, month to month, there might be slippage on that number a little bit here and there. But at the end of the day, people do want this sort of thing. The supercharger network is there, and it's growing. Down the road, when fuel stations become true fuel stations offering electricity, that boogeyman gets killed. It just becomes a question of, can they get the cost per vehicle down to the point where they can have profitability? As not a covering analyst, I look at the other analysts that write research on this, and I see, like the guy from Baird saying that, if they can get the operating margins to a certain level, this is $1,000 stock, and I hear, all sorts of things of, 20% gross margins for the car, but,
If I sprouted wings, I could fly. And I won't mention the name. The initiation yesterday didn't mention that subsidies were expiring, which is one of the reasons I think the coverage of this name is so bad that, and I think even on the bull side, you make much stronger arguments than most of the stuff that we end up reading from traditional analysts. Like, how do you write an initiation and not mention that the subsidies are going away? But I think that we agree that there's a base level of demand, but what we see very clearly, and we're big into building our own data sets and trackers and alternative data, what we see is actually a stock that's priced for demand growth, like substantial ongoing demand growth, these like 70% revenue numbers. And that in the third quarter, deliveries could actually be down year over year, or at least flat. And that we don't see demand growth anywhere. When we look at the used market, we see the length of time it takes to sell a used Tesla increasing. We see counts going hyperbolic in Europe and increasing greatly in the US as these things come off lease. We just don't see the demand growth that we need to justify the kind of bullish outlook that's out there.
Yeah, so oftentimes is the case with the story stock type thing. It's the demand that was even got the stock to this sort of level where there is this sort of debate. There is then that I can't believe there's going to be more demand in the future. Yet somehow there always seems to be something like that. It's like no one expected Apple to sell that many iPhones. No one expected that many subscriptions to be sold by Zacks either, though. So, it's a little bit of a question mark of where is this demand coming from, but it always ends up coming out of somewhere.
Well, you should tell them where to sign up for Zacks. And with that, why don't we wrap it up? Brian, thank you so much. This was a lot of fun.
Yeah, Jay,
I love your jacket, and you'll have to send me your tailor's name and number. And I hope to do something like this in the future. We'll be able to tell what happened to demand over the next year, and why don't we get together again?
We'll definitely have to come back to revisit this. Thanks for having me, Jay. I appreciate it.
Great, thank you, Brian.